It's Benzinga, bringing Wall Street to Main Street.
Alphabet reported second quarter revenue and earnings that beat analyst expectations, according to CNBC. Revenue reached $96.43 billion, with earnings per share at $2.31. YouTube advertising revenue and Google Cloud outperformed estimates, and total revenue rose 14% year over year. Alphabet announced a $10 billion increase in capital expenditures for 2025, raising the total to $85 billion to meet rising demand for AI and cloud services. AI Overviews reached 2 billion monthly users, and the Gemini app had 450 million monthly active users. Alphabet also acquired Windsurf in a $2.4 billion deal to boost its AI talent. Chipotle Mexican Grill reported second quarter revenue of $3.06 billion, falling short of the $3.11 billion consensus, according to Benzinga. Adjusted earnings per share were 33 cents, matching expectations. Total revenue rose 3%, fueled by the opening of 61 new restaurants, 47 of which featured a Chipotle. Digital sales accounted for 35.5% of food and beverage revenue, while restaurant-level operating margin was 27.4%. Company repurchased $435.9 million in stock and now expects 2025 comparable sales to be roughly flat, down from prior guidance. Chipotle expects to open 315 to 345 new restaurants in 2025, with over 80% featuring a Chipotle. Southwest Airlines reported second quarter adjusted earnings of 43 cents per share, missing the street estimate of 51 cents, according to Benzinga. Revenue fell short at $7.24 billion versus the expected $7.3 billion. Company authorized a new $2 billion share repurchase program. Southwest said industry demand is showing early signs of recovery following a weak second quarter and expects a more favorable environment in the second half of the year. It forecasts third quarter revenue per available seat mile between -2% and +2%, and fuel costs between $2.40 and $2.50 per gallon. Shares were down 0.24% in extended trading on Wednesday. General Dynamics traded higher on Wednesday after reporting second quarter 2025 results that beat Wall Street expectations, according to Benzinga. Global Aerospace and Defense Company reported revenue of $13.04 billion for the quarter ended June 30th, up 8.9% from a year ago and above analyst estimates of $12.19 billion. Earnings rose to $3.74 per share, a 14.7% year-over-year increase, exceeding the consensus forecast of $3.44. Strong performance in its marine systems and aerospace segments drove the gains. CEO Phoebe Novakovic projected 2025 revenue of $51.2 billion, up $900 million, with margins holding at 10.3%. General Dynamics shares rose 5.34% on Wednesday after the CEO's bullish earnings call drove investor optimism. Hasbro shares dropped 2.25% in pre-market trading on Wednesday despite reporting second quarter earnings that beat Wall Street expectations and raising its full-year guidance, according to Benzinga. The company posted adjusted EPS of $1.30 on $980.8 million in revenue, topping forecasts of 76 cents, $874.28 million, respectively. Growth was driven by a 16% year-over-year increase in its Wizard of the Coast and digital gaming segment, while consumer products and entertainment fell 16% and 15%, respectively. Hasbro said tariffs have not yet affected margins, but expects costs to rise in the third quarter with holiday inventory builds. CEO Chris Cox said the results validate its playing to win strategy. The company now expects full-year revenue to grow by mid-single digits, up from its previous forecast of slight growth. CFO Gina Goder warned of $60 million in tariff-related costs expected in 2025. Mattel reported second quarter net sales of $1.019 billion, down 6% year over year, and below the street estimate of $1.068 billion, according to data from Benzinga Pro. Company posted earnings of 19 cents per share, beating expectations of 17 cents. CEO Nan Krees highlighted gross margin expansion, international growth, and progress in the company's entertainment slate. Mattel saw steep declines in sales of dolls and in its infant, toddler, and preschool categories. Sales of vehicles and action figures grew, driven by strong performance in Hot Wheels and related products. Barbie sales declined amid consumer concerns over affordability and tariff-driven headlines. Mattel lowered full-year EPS guidance to $1.54 to $1.66 per share and revised its sales growth forecast to 1% to 3%. Company cited market volatility and global trade risks. Shares fell 4.46% after hours. Sales of previously owned U.S. homes fell 2.7% in June, missing analyst expectations of a 0.7% drop, according to CNBC. Sales were flat year over year as mortgage rates hovered around 6.8% during the contract period, hitting affordability. The median home price hit a June record of $435,300, up 2% annually, marking the 24th straight month of price gains. Inventory rose 15.9% to 1.53 million units, a 4.7-month supply, still below the 6-month benchmark for market balance. First-time buyers made up just 30% of sales, while all-cash deals stayed high at 29%. Homes spent an average of 27 days on the market in June, up from 22 days a year earlier. Higher-end properties are selling more quickly than homes priced under $500,000. Amazon has closed its artificial intelligence research lab in Shanghai, citing strategic shifts and rising U.S.-China tensions, that according to CNBC. The closure affects roles within Amazon Web Services, including recent layoffs in its U.S.-based marketing and training teams. Amazon spokesperson Brad Glasser said the company decided to cut roles in certain Amazon Web Services teams as part of a difficult business decision. AWS launched the Shanghai lab in 2018 to work on machine learning and natural language processing. But escalating geopolitical pressures and Trump-era tariffs have driven many U.S. firms to reduce their China operations. The move follows Amazon's broader retreat from the region, including the 2022 shutdown of its Kindle store and the 2019 closure of its China e-commerce platform. Microsoft is facing global fallout from a serious SharePoint server flaw that has impacted more than 400 organizations, according to Bloomberg. Dutch cybersecurity firm iSecurity reported a 6-fold surge in SharePoint-related cyber attack victims within days. U.S. National Nuclear Security Administration and the National Institutes of Health were among those breached. South Africa's National Treasury confirmed malware in its network and is collaborating with Microsoft to address the issue. iSecurity's Vaisha Bernard warned that the actual number of victims may be higher due to undetectable methods of compromising servers. Microsoft said it's aware of ongoing attacks on premises SharePoint servers, users exploiting vulnerabilities only partially fixed in the July security update. NVIDIA CEO Jensen Huang said AI will eliminate mundane tasks and boost productivity, but warned that workers who don't embrace the technology risk losing their jobs. Speaking on the All In podcast, Huang said AI will transform the job market by creating new opportunities and changing how people work. He warned that those who fail to adopt AI risk being replaced, emphasizing that using AI is now essential for job security. Huang emphasized that AI is generating new opportunities, saying it enables companies to create in-demand products and fuels job growth. Huang also noted NVIDIA's partners receive a year's notice of its roadmap to plan ahead. Tesla CEO Elon Musk shared bold updates during the company's second quarter earnings call, according to Benzinga. Billionaire announced plans to launch autonomous ride-hailing for half of the U.S. population by year-end, pending regulatory approval. He said Tesla's autonomous ride-hailing plans depend on regulatory approval and emphasized the company is proceeding cautiously. Musk said Tesla plans to rapidly expand its robotaxi fleet and service areas, with approvals pending in Phoenix and Florida. He shared that Tesla is working with Dutch regulators on full self-driving approval, aiming to expand to the EU and resume progress in China. Tesla warned of potential rough quarters ahead due to the phase-out of federal EV tax credits and rising costs from Donald Trump-era tariffs. During the second quarter earnings call, CEO Elon Musk flagged the fourth quarter of 2025 and the first half of 2026 as potentially challenging, though not definitively. Tesla said it is facing multiple challenges, including the pending expiration of the $700 federal EV tax credit for many of its models this quarter. Tesla said tariffs imposed by President Trump raised its cost by about $300 million from the prior quarter. CFO Vaibhav Taneja noted that most of the impact hit the automotive business, with less effect on energy. Musk remains bullish on the company's long-term profitability, citing the expected rollout of autonomy at scale in late 2026. Wedbush's Dan Ives views the end of EV subsidies as a net positive for Tesla's competitive positioning. Tesla shares dropped 6% in pre-market trading Thursday, according to CNBC. The company recorded its second consecutive quarter of falling automotive sales and missed both revenue and earnings expectations. Tesla missed both revenue and earnings estimates in the second quarter, with automotive revenue falling 16% year over year to $16.7 billion. Elon Musk said Tesla could face a few rough quarters due to the expiration of federal electric vehicle tax credits, though he emphasized it was not a certainty. Tesla faces increased pressure from lower-cost EV rivals in China and Europe, with June registrations in Europe also declining. Investors are also concerned about Musk's political activity, including his role under Trump and his support for Germany's AfD party. The company has started limiting production of a more affordable model, but declined to offer guidance, raising questions about Tesla's growth outlook for 2025. President Donald Trump is scheduled to visit the Federal Reserve on Thursday, marking the first official presidential trip to the central bank in nearly 20 years, according to CNBC. Trump's planned visit to the Federal Reserve breaks with the long-standing tradition of presidential respect for the central bank's independence. Trump has openly criticized Powell's leadership and floated the idea of firing him, though legal experts question whether he has the authority. Powell stated that his removal is not permitted under current law. The president told reporters he believes Powell has done a poor job, suggesting the Fed chair may be out soon. He previously consulted Republican lawmakers about firing Powell, but later denied plans to remove him, calling it unlikely unless fraud were involved. President Donald Trump signed 3 executive orders Wednesday aimed at accelerating U.S. leadership in artificial intelligence, according to The Hill. Orders fast-track data center permitting, promote American AI exports, and bar AI systems with unethical bias from federal contracts. Trump unveiled his AI action plan at AI Summit and the All In podcast, pledging unmatched innovation and national dominance. One order directs the Council on Environmental Quality to streamline environmental reviews for low-impact data centers. The move follows criticism of so-called woke AI from tech leaders like Elon Musk, who claims models like Google Gemini promote political bias. Tesla reported over $280 million in unrealized gains on its cryptocurrency holdings in Q2, driven by a 30% rise in Bitcoin's price, according to Benzinga. Tesla's balance sheet listed $1.235 billion in digital assets for the second quarter, reflecting a nearly 30% increase from the prior quarter. This led to $284 million in unrealized gains versus the $125 million loss reported in the previous quarter. Tesla does not disclose a breakdown of its crypto holdings, but Arkham Intelligence reports its entire $1.37 billion stockpile consists of Bitcoin. Tesla began its Bitcoin investment in January 2021 with a $1.5 billion purchase. Bitcoin closed the second quarter up approximately 30%.
For all things money, visit Benzinga.com.